Hello everyone, how are we doing today? If you guys could give me a quick audio check, make sure the screen's sharing so we can go ahead and get right into it. Welcome, welcome. Hello everyone, how are we doing today? If you guys could give me There's audio issues. Okay, let me go ahead and see what's going on my technical man. Abraham, what's going on, brother? Okay, we're good now. Awesome. All right, thanks, Eugene. Thanks for letting me know. Denisha, I appreciate it. There's audio issues. Hello, Abraham. Hello. Okay. All right, we're all good. Awesome. All right, thanks everyone. Audio Raptor, appreciate it. David, Yayo, excited, brother. Sounds good. Awesome. Happy to have you, David. Denisha, what's going on? Hope everyone had a great weekend. Happy Canada Day to those who celebrated yesterday. Happy Canada Day to all our folks up north in Canada. And as you all know, we got our July 4th here in the United States on Tuesday. So happy early Independence Day to all of our American folks. Olawale sounds good. Appreciate it, brother. Ellen, good, Dylan. David, let's get it. Awesome. Let's go ahead and get right into it, guys. So before we go ahead and get into the technicals, let's go ahead and take a look at the economic calendar real quick. So as you guys know, we do have a U.S. bank holiday on Tuesday, so not expecting much with regard to Tuesday's trading. And also keeping in mind, it is non-farm payroll protocol, so we do have non-farm payroll. And then we also do have FOMC meeting minutes on Wednesday as well. So overall, it's going to be an interesting week, just looking at the economic calendar alone, but then also considering that we have a new month opening up. So keeping in mind that we have a new monthly open. So quite a few factors here to keep in mind that I will be monitoring throughout the week. So with that, let's go ahead and get into the charts, and I'll share what I'm seeing, my opinions, and also give you guys some objectives and some possible opportunities in the markets for this week. So awesome. So for those of you guys that are new here, I know we have quite a few new people in the Telegram, as that's growing like wildfire. Love to see it. Love to see it. And so we're going to go ahead and get into the dollar index analysis. I'm going to share what I'm seeing with regard to the dollar, as it's pretty much going to affect the rest of the financial system. Whether you trade indexes, forex, bonds, commodities, it's all going to eventually bend the needle what dollar is doing. So it's always important to be aware as to what this asset is doing as your barometer for risk on and risk off. And then we can further qualify what we're seeing in dollar index based off what the bond market's doing. And then we can use that to trade with in line with high probability in our other traded assets, whether that be forex, indexes, or commodities. So with that, let's go ahead and get into the price action for dollar index. So looking on a weekly chart, I shared with you guys that my ultimate draw, where I'm expecting us to draw into, is these relative equal lows. As we're still seeing bearish order flow, we traded up to this bearish order block in here. Let me turn up the volume real quick. Okay. Let me know if this is better, Abraham. Okay. So as I said, the ultimate draw here is these relative equal lows on the weekly chart. That's what I'm favoring. And then given that we're seeing weakness in these premium arrays, being that we trade up to the mean threshold of this bearish order block, and then we trade it softer off that. So this previous week, it was a doji, or in other words, it closed pretty much where we opened. So we opened, traded lower, expanded higher, and then closed right around the open. So this is okay in terms of still qualifying bearish order flow. All this is, to me, is a repricing up to this premium city sell side imbalance, buy side inefficiency. So market's offering premium and also rebalancing this inefficient delivery, but then we did close below it. So as we know, we want to see the close, as that's going to tell us the true narrative. So the fact that we were unable to close above this still indicates to me that the dollar is going lower, indicating risk on. So I will still be expecting higher forex and higher index markets. So on the weekly chart, let's see if there's anything else I had in my notes. Yeah, so going into this week, specifically on the weekly chart, as long as we remain below this fair value gap in here, let me go ahead and mark that out for you guys. So as long as we remain below this, I do favor lower prices. And then we also have this fair value gap in here that's acting as inversion. And then note how the bodies are respecting that, indicating that we are still bearish. So I'm still favoring lower prices here for dollar index based off what we're seeing on the weekly chart. So let's go ahead and drop into our daily chart. All right, let me take these levels off. So after trading lower into discount, we did trade down to this daily fair value gap here. Let's make that blue. And then we traded higher off that, shifting market structure above this high. And then what I wanted to see last week was us trade lower and continue lower. However, the market wasn't willing to do that. We ended up finding support inside this daily fair value gap, inside this bullish order block, and then we traded higher to rebalance this inefficiency on the weekly chart. So now that we've traded up there, we then traded up and rejected it. We also have these two up close candles here, which is our bearish order block. So on the higher time frames, this to me looks like a retracement and still has not upset any bearish order flow. If we do trade above this purple shaded region, which is our weekly fair value gap, and these two consecutive up close candles being our bearish order block, then I would potentially favor higher prices on dollar. But until we see that, I'm sticking to my guns here and letting you guys know that I'm still favoring lower prices or risk on markets. And that's what I'll be going into this week, looking for opportunities in line with. Awesome. So dropping down into our hourly chart now. Classic buy week, opening here on Sunday, trading lower into discount. And then we made that low of the week on Tuesday, expanding higher into this fair value gap here on the weekly chart. So once I saw that we traded lower, we then started displacing higher here. We have a bullish order block. Let me extend that line through. Here. We do see accumulation at that order block and expanded higher. So then once I started seeing these bullish signatures, then I did expect this weekly fair value gap to be the draw, and then also the inverse on euro, and I'll cover euro. I'll go ahead and get into that once I wrap up dollar, because I know we have quite a few euro traders that wanted me to look over last week, so I'll be sure to get to that. I haven't forgotten. So as I said, we saw that bullish order flow trading into these premium arrays, and then we immediately traded lower after reaching them. So what I'll be looking for this week on the hourly chart for dollar index, we traded higher multiple times, purging buy side, and then we displaced lower with energy and aggression. So this indicates to me that we're still bearish given how we're trading at these premium arrays. So straight to the point, what I'll be looking for on dollar index is a reaction from this fair value gap here in premium. So what I'll be looking for is some type of open, Judah swing, and then I would want to see the market trade softer inside of these premium levels. So given the economic calendar, it is reasonable to expect a lot of volatility and erratic price delivery. So take my analysis with a bit of a grain of salt, because I'm going to also be monitoring these levels very closely. It's not like other weeks where, okay, we're going there, it's a slam dunk short, easy money for everyone in the chat. This isn't one of those kind of weeks, given that we do have the economic calendar organized the way it is and the bank holiday. So gun to my head, this is what I'm favoring, what I'm expecting going into this week. However, it would be still important to monitor and see how we trade at these key levels. However, this is what I'm favoring. And then another thing here also is we do have some nice trendline liquidity here that I would be interested to see the market trade down through. So that's what I'm seeing for dollar index going into this week. The invalidation level for what I'm looking for is us trading higher through this fair value gap. If we trade through this fair value gap, that also puts us above that purple shaded region, which is that weekly key level that then likely sends us higher. So that would indicate bullish order flow for dollar index. However, I'm not favoring that. So now let's go ahead and transition over into the forex markets. We'll take a look at euro. Go to a daily chart. All right, let's go ahead and clean this up a bit. Go up to our weekly. So as you guys know, euro is just the inverse of dollar. So same thing we saw in dollar, we saw in euro. We're bullish, expecting higher prices. However, we did see a retracement down to this weekly fair value gap in here to reprice it. So as soon as we traded down into it, we saw an immediate reaction higher, trading off the lows, but still delivering to this inefficiency for an institutional order flow entry drill. Some things that were giving indication of early weakness or weakness early on in the week was looking at this wick above market price. So for the euro traders, pay close attention. This is how you can start measuring and reading order flow to determine whether the bias we're looking for is going to play out or not. So let's go ahead and look at this key level here. We have this wick above market price. So what we're doing with these key levels is we're measuring order flow. We want to see how price trades around these key levels and how the algorithm either respects it or shows lack of respect for these key levels. And that's going to give us the insight into the real institutional order flow. So the fact that we traded up to 50% of the wick and we're unable to trade above it was then a warning sign for seeing higher prices. And then dropping all the way down into our hourly chart now, looking at how we traded at this key level here. Go ahead and take this off. Seeing how we traded here, traded up, rejected it, and then we started seeing bearish order flow down into the sell side and that weekly fair value gap. So same thing as I'm seeing on dollar. This retracement to the inefficiency doesn't negate our bullish order flow. Everything's still a go for higher prices as far as I'm concerned. It's just a normal retracement down to an inefficiency. So same thing on dollar. I'll go ahead and get right to it with what I'm seeing for euro, which is higher prices. So I'm going to want to see how we trade inside of this inefficiency here. And this is where I'll be looking for our longs to form. I like this as a key low. I wouldn't want to see this low violated. Why? Because it's a low that took out sell side. So because this low took out sell side here, it already did the job of running out stops. So I prefer to see this low remain intact if we are going to go higher. And I would want to see some type of buy setup or buy indication occur within this specific fair value gap. And then for those of you guys know, we also need time elements to come in alignment with price. It's not just trade down in here and look to buy it. I'll be looking for some type of low of the week to form Monday, maybe even Tuesday, depending on how the market trades going into that, but also keeping in mind the economic calendar as I highlighted. So for the targets this week on euro, I like this high here at the 1.09773. Through that takes us into the big figure 1.10 number. And then through that, I like these relative equal highs, buy side liquidity. That's also in alignment with what we're seeing on dollar, which is those relative equal lows. So assuming we get acceleration on the downside with the dollar index, I would then favor a much easier rally for the euro market. And then going all the way up to our weekly chart, one of the reasons I'm favoring that is because we have this volume imbalance in here. So this is my higher time frame drawn liquidity. So us trading down to this fair value gap here doesn't negate bullish order flow. So I'm expecting us to use this as support to send us higher into these key premium levels. So let's go ahead and go into the S&P now. Take a look at the chat real quick. Earl, good day, Dylan. Thanks for joining us. David, going to be a shifty week. Definitely going to be interesting. I'm not going to be looking to push my highest leverage this week. I'm just going to be really using it for intel for the most part, so that then I can have the insights this week will give us moving forward into the coming month. Davies, hi there. To Denisha Tani. Awesome. Got the friends in here. Happy to see it. Raptor, all good. Christian Cadet, hey Dylan. How do we trade well GU and EU for forex during New York time, since London session is very weak? Is the ICT silver bullet probable around that time? In Montreal, London starts at 2 a.m. Okay, all right, so you're working with Canada time. I'll definitely have my associate Tommy get back to you with more specifics on that. I'll go ahead and cover the forex markets and how you can navigate that time window to the best of my knowledge. But the expert here on our team with regard to forex is definitely our man Ola Tommy. So I'll be sure to get that question to him. And as always, he'll get you taken care of. So go ahead and go into S&P now. So beautiful delivery last week for S&P. Put a clinic on for the S&P price delivery. Let's go ahead and take a look at that. So last week when we opened right here at the low of this blue candle, we opened and then I said, I want to see how we trade inside this weekly fair value gap. That's going to indicate what we do. Traded down into it, beautiful support, and then rally higher, repricing back to the high end of this weekly fair value gap here in gray, and then also repricing through the buy side liquidity above the June 12th high. So 2 weeks ago, the weekly high, we beautifully traded through that. So there was plenty of price action to profit off of with S&P this week, and it's all what we were expecting, which is higher prices, premium arrays to be delivered to and through. And then I even sent an update in the Telegram channel confirming to you guys that that is what I was looking for, with very specific targets of where I was expecting the market to draw. And then what do you guys know? It delivers like gangbusters. So no surprise here to us. Still seeing higher prices, bullish order flow on S&P. So going into this week on a weekly chart, I will expect us to continue delivering higher. And then my drawn liquidity is this volume imbalance in here. And then once we trade here, I will then be patient and then I'll allow the market to show its hand. Do we want to continue expanding into the buy side liquidity here? That's something that I'm not guaranteeing as of right now. I will want to wait for more information. So as I said, the drawn liquidity is this weekly volume imbalance. So there's still plenty of meat on the bone to profit on that move. However, then I do want to see how we trade here. And that's going to indicate to me what we're doing moving forward in the index markets. So as I said, beautiful delivery down to the weekly fair value gap, repricing to the low end handsomely, and then immediately expanding higher throughout the week. I think each day after Monday was an up close. So as I said, plenty of opportunity to do well in S&P this week. And as I said, no surprise to us. All right, so let's drop down into our daily chart now. All right, beautiful. So just keep in mind those two black lines here is the fair value gap from that weekly chart. And keep in mind it also overlaps with the fair value gap here on the daily, this inefficiency. So Monday we opened here, and then I said how we trade here will be influential throughout the week. Let me go and drop into that hourly and cover what it was that I shared with you all last week and how we forecasted this. So we have equal lows stacked at that 43.80 level here, here, and here. So I said if we're going to go bullish this week, I originally told you guys the drawn liquidity was that sell side and that weekly fair value gap. So I called it lower, told you guys where we would turn from. So once we traded through these lows, I told you guys if we are going to be bullish and trade higher here for S&P, we would want to see a rejection of these lows, meaning trade down and immediately reject it higher. So is this that confirmation that I said we would see? And it delivers beautifully. What day of the week would we expect a low to manifest? Monday transitioning into Tuesday, and that delivers beautifully. So as I said, plenty of opportunity this week in the S&P. Just looking at the fair value gaps just on an hourly chart, how it gave these entry opportunities. There's one. Another fair value gap here too. And then we have this fair value gap 3 here that was a valid long opportunity for a swing position. And then I shared with you guys that I did take that. So the reason I like all these as valid entries is because for those of you guys that have been with me for a bit of a longer time, you guys know what an implied dealing range is. So if I'm expecting the market to deliver up to here, all the best long opportunities are going to form below that equilibrium, below that 50%. So these are all valid longs. And then as we leave this 50% of that implied dealing range, we then begin what's called the expansion phase, where then the market isn't likely to retrace or give any high probability entries. It's just going to expand aggressively into the premium objectives. So overall, beautiful delivery last week for S&P. So now with that in mind, let's go ahead and look at this week and what I'm expecting coming up. All right, so back to that daily chart. Let's go ahead and zoom in here. So the first target for last week was this balanced price range. I wasn't expecting us to trade to the balanced price range and then trade softer off it. I was expecting us to trade to and through it, because then, as you guys know, my next target was the buy side here. and then the low end of this volume imbalance. Then we fell, I think that's maybe 1.5 to 2 points shy of the volume imbalance. So not perfect, but still good enough to profit off that. Still plenty of meat on the bone to take advantage of this week. So as I'm saying, going into this week, the drawn liquidity is this weekly fair value gap. That will remain true as long as we stay above this daily balance price range. So there's no reason for us to come back through this daily balance price range if we are to remain bullish. Another thing is that this weekly volume imbalance in gray is now also a balanced price range. It's balanced because we've offered buy side, sell side, and then we've left that price range now. So if we are to trade higher, we should not violate this weekly key gray shaded region. But more specifically, refining that even further, we can refine that to that daily balance price range that I would want to see support price. So as I said, for targets on this week, previous week highs is a good target right at the 4,500 big figure number. 45.40 gives us our consequent encroachment, and then 45.75 gives us that high end of that weekly volume imbalance, and then my crystal ball goes dark after there. And then, as I said, I'll be waiting for more information, and then we'll be on top of it once the market shows its hand as usual. So with that, let's go ahead and drop down into the hourly chart now. Awesome, getting some support in the chat. Thank you, Lotus Kano. Thank you very much. You are amazing. Very much appreciated. Very much appreciated. May, thank you. Thank you. Very much appreciated. My two special ladies, thank you guys very much. Big shout out to them. All right, so going down into our hourly chart now. So what I'll be wanting to see this week here for the S&P market will be a retracement. Obviously, as we know, if we're expecting a bullish week, we're not just going to buy it at open. We're going to allow for some type of manipulation to occur. All right, I'm seeing there's a little bit of lag. All right, so I guess YouTube's giving us a few issues. Let me see what I should do. All right, well, I'm gonna go ahead and keep moving forward. I'm hearing from my associate that there's a bit of lag on the video. If you guys are seeing that too, be sure to let me know. But all right, so moving right along on the hourly chart for S&P, as I said, favoring higher prices, but we don't just start buying it open. We need to wait for some type of manipulation to trip up the less informed traders. There's a lot of traders that first move of the week, they're impulsively jumping all over it, and that's our liquidity. So as we open this week, depending on where we open relative to last week's close, I would be interested to see a retracement down to this fair value gap in here and see how we trade there. And keeping in mind, this purple shaded region is that daily fair value gap, daily balance price range that I would want to see price remain above. So now refining this even further through the time frames, looking at this hourly chart, I want to see a reaction here. The reason I also like this key level is because looking at this on regular trading hours, this is also a liquidity void. So we have a void here and here as well that the market will likely want to reprice down into before continuing higher. It doesn't need to do that. We could open and then run higher and then give a midweek reversal. So that's what's a bit challenging about a week that has an economic calendar stack like this, is that price action can be a bit erratic and not what we typically expect. But if it's going to be a classical bullish week, I do like this regular trading hours gap void here as a draw, and then taking it back to electronic hours, that's this fair value gap in here. And then I want to see how we trade here, see if that's going to set up our longs into the volume imbalance. So that's personally what I'll be looking for here on the S&P. All right, so let me go ahead and get to the questions in the chat then. And then for those of you guys that monitor Nasdaq, same thing there. Yeah, so same thing with Nasdaq, still seeing that bullish order flow, found support from this fair value gap here handsomely. So still seeing the same thing across all the indexes. Awesome. All right, so let me go ahead and get the Christian's question real quick. How do we trade? All right, so for forex during the New York session, there's a couple things you want to pay attention to. So we'll go ahead and look at Euro. So for New York session trading, the forex markets, London's going to be imperative. So the nice thing about trading the New York session that I see as an advantage is the benefit of already seeing what the London European session did. So by looking at the New York session, you have that added benefit of the London European session. So how do you use that information into something that you can do, that you can implement into your trading? So if London session is a consolidation, we can then expect that reversal or high of the day to form in New York. If we see a Judas swing or manipulation move in the London session, taking out Asian highs, let me go ahead and look at an example of that, because trying to picture that in my mind is a lot for me too. All right, awesome. Let's just go ahead and look at Friday's price action, then the most recent, so we can just look at something recent here. So here we have our Asian range here from, just call it this. I know it's not exactly right on, but this is good enough. Okay. And then we see our midnight open. So here's our midnight open. Let me make that a bit darker. All right, perfect. So here we have our midnight open, true day open for the forex market. So as I said, one of the reasons I like New York session is because we have the added benefit of seeing what London did. So if we're bullish, which after trading down to that weekly fair value gap, we're then going to look for potential longs, because keeping in mind we are bullish on the higher time frames. So after seeing this manipulation here below that midnight opening price, below the Asian lows, what do we have here? Low, low, that's relative equal lows. So then we dig into those lows going into the London session. We then create our low of the day because we're looking for higher prices. So a first target could be these relative equal highs here, but then we also have this huge SIBI, or sell side imbalance, buy side inefficiency here, that the market's going to want to reprice up into. So once we see this manipulation here, we see that low form, and then we see that shift in market structure here. We see this swing high taken out with a displacement. Displacement meaning that there's energy on the upside delivery, and it creates a fair value gap. So we see that shift in market structure, giving us our confirmation for bullishness, and then we get that expansion going into the New York session, trading higher into the obvious levels of liquidity and inefficiency. So let's go ahead and look at another example here for the euro. Let's go ahead and look at Wednesday's trading of this current week. So here's that midnight opening. We see the midnight open. We have Asian range here. We then see the false move here ahead of the session. Why is this not a high probability trade? Because it's before that 2 o'clock kill zone. And we haven't had stops taken. So that can negate this as an entry. So then what do we wait for that 2 to 5 a.m.? We wait for that high or low of the day to form. So because we're bearish down into this purple region, we then want to see how we trade in London. So London takes out these highs here. We then displace lower through the lows. This is displacement because it's an energetic run and there's inefficiencies on the downside delivery. So now looking at this, we also have a drawn liquidity being these relative equal lows here and the low here, inefficiency. And then as I said, these relative equal lows. So these would all be valid targets. And then you can even start doing other things like fib projections to start lining up with your PD arrays. So what you can do is start also seeing, okay, what fib projections are lining up with these draws on liquidity. So the fact that we have the 2.5 here aligning with these relative equal lows, this makes this a high probability place to exit trades. Why? Because, okay, we have liquidity there, but now we also have our Fibonacci extensions aligning with these key levels. So this would be a valid profit taking. And then it actually occurs within that profit-taking window, which is London close from 10 to noon. So 10 to noon, New York local time, we expect the low or high, the daily range to be capped, and then we see that here. So time here, London close, aligning with price. So then how would you take advantage of this as a New York session trader? So we see that we have the displacement occurring. The New York session will typically give a optimal trade entry or return to premium for the New York session smart money traders to take advantage. So going ahead and measuring this dealing range from low to high. This retracement here, just above the equilibrium, beautiful place to sell short. Why? Because it's also aligning with this bearish breaker. So whatever your entry model may be, breaker and a premium, short down to these obvious liquidity levels. So there's a couple ways you can take advantage of the forex markets during the New York session. And as I said, if you still want more clarity or more ideas, we have someone on our team here, my man Ola, that specializes in the forex markets. So with that, let me go ahead to the next questions. Hopefully that was helpful there for you, Christian. Joe Carrera, ES bearish this week, so I shared what I was expecting for S&P this week. Raptor, can you explain a little bit about entry models? So I'm not going to go into entry models as much here on this video. I do have another series where I have covered an entry model I use, and then I've shared several examples of that, so I would direct you there to get more clarity in that regard. And then also ICT's YouTube channel has a plethora of them. So Madara, Dixie looks bullish for me. Looking at the other side of the coin. Awesome. Yeah, if that's what you're seeing, that's what your analysis is telling you, roll with it. Roll with it. I'm not 100%, but as you guys know, I win much more than I lose, and that's all we need to do very well in this business. So, Christian Cadet, perfect. Thank you, Dylan. Awesome. Glad that was helpful, my man. Madara, which time frames are specifically good for market structure shifts? All of them. All time frames have market structure shifts. It just depends on what you're looking to trade and what your model says. So what time frame are you looking to execute on? That's all up to you, but they all have market structure shifts. Lotus, thank you for your hard work, Dylan. Much appreciated. The pleasure is all mine. Thank you for the continued support. Very much appreciated. David Vega, intermediate term low, short term low, looking beautiful. A little under 50% of the dealing range. Referring to euro, I'm assuming. May, you deserve all the support. Keep up the amazing work. Much appreciated. Much appreciated. All right. Yeah, okay. So I'm seeing that we're running into a few technical issues here with the audio. From what I'm seeing from my associate that is the technical specialist, he's saying it's YouTube's end, so there's nothing I can do. Maybe try refreshing. That would help you guys out on your end, but it's nothing here on my end. It's coming from YouTube, so excuse the technical issues. Yep, thanks Anisha, best to refresh. Awesome. Semper, hey brother, always a pleasure to see you. What kind of risk management do you recommend for a day trader who can't be consistent and has a low win rate? What do you recommend? So for risk management, what I personally do is I risk 1%, and then after taking a loss, I reduce that risk by half until I get down to 0.25%. And then once I have winning trades to where I make back my drawdown, then I'm able to move back up to the previous risk. So if I win 1.25%, I'll move back up to 0.5%, and then I'll move back up to 1%. So as a new developing trader, you don't want to be in a hurry to get drawdown back. Okay, appreciate it, Abraham. Yeah, so what you want to do as a trader that's starting out, still finding their footing, you want to dial down your trade frequency. You want to make it easier for you to not be in significant drawdown. So I personally shared my risk management. ICT actually has some great content on his YouTube channel for risk management series, and he covers that at length there. If you have a low win rate with your strategy, then it would be recommended to reduce that risk until you do find more consistency, and then potentially look to scale up risk, but that's all a personal choice, of course. Sal, can I take a look at Neo? Absolutely. My man Sal, what's going on, brother? All right, beautiful. All right, awesome. So looking at Neo here, so I remember calling this thing higher along with the Nasdaq, the rest of the index markets, and we've actually seen that. So nice delivery on Neo for a low cap or mid cap stock, I believe it is. So we took out the sell side here multiple times, displacement higher, traded down to discount, measuring the dealing range from low to high. Here, traded down to discount, so that first inefficiency that's below that 50% would be this volume imbalance here, found support there and rallied higher. So on Neo, I'm seeing higher prices. I would expect the first draw here to be, call it 1021. And then through that, we have this high here at the 1080. And then animation through that takes us into this inefficiency here at the all the way up into the 11s. So the low 11s would be a target, then next 1140, and then I'd want to see how we trade there. So that's what I'm seeing for Neo. So in terms of places to look for some type of low or bottom to form, I do like this fair value gap in here. It may not even need to trade down to it. We could find support in this volume imbalance and trade higher. So that's what I'm seeing for Neo on the week. Lotus Kana, happy 4th. Happy 4th of July. Also, thank God it's Friday setup at your USD. All right, Earl Garrison, does the expansion that causes the fair value gap qualify the market structure shift? So whenever we're qualifying a market structure shift, we just prefer that fair value gap simply because that confirms that there's institutional sponsorship behind that move. So it's much more likely to be a sustained movement in that direction when we have those fair value gaps. A fair value gap isn't necessarily needed to qualify a shift in market structure. It's just something I personally like seeing as an added confirmation that there is indeed institutional sponsorship behind the displacement move that we just saw. So that's personally how I use that and weigh those things out. Sal, thanks for the breakdown. David Vega, Tommy, yep, Tommy the man. Denisha, thanks for the insight. Always appreciate it. Thank you for joining us. Raptor, can you explain a bit about what should I consider a valid market structure shift? So for market structure shifts, there needs to be several things that come in agreement to make it high probability. A lot of people just watch the 2022 model, and this is actually something I discussed with one of my colleagues, Radif, before, that a lot of people just look at 2022 model and they think every shift in market structure and a fair value gap is either long or short. It does require a lot more understanding than simply any swing high broken being a shift in market structure. Ways you can qualify them is understanding the higher time frame. That's going to be the key, and that's why we emphasize that so much here in these pre-market analysis sessions, because without the higher time frame premise, none of these concepts work effectively. So for example, let's look at this balanced price range. If you're ICT 101, you watch the 5-minute trainer and you see this, well, that should be a short to go lower. But it's not, because the narrative or the bias is high. We're all looking at higher prices. So we're not going to look for these discount or premium arrays to reject price. So it's all about having that higher time frame bias and draw liquidity in mind. And then that's how you can go about qualifying high probability shifts in market structure that are likely to continue. Another key tip for shifts in market structure is wait for liquidity to be taken. So let's drop down to the hourly chart here, recap this on S&P. So why do I like this as a market structure shift right here? So, I mean, you could even use this low right here, but just looking at the higher time frame structure, let's just go ahead and look at this one right here. So I like this as a shift in market structure, not just because we took out a random high, but because we've already ran out the sell stop. So retail that's looking at these relative equal lows here, support now broken. Oh, the S&P should now fall to 0. Those traders that are looking at it like that, they're the ones that are on the other side of our trade losing their money. So with that in mind, we need to see stops be taken. So we see a stop run here, and then we get that displacement higher. Whereas, I don't know, potentially right here, let's say you're looking for this as a shift in market structure. Well, we still have those relative equal lows here. So that's another way you can qualify high probability versus low probability shifts in market structure, is just simply waiting for that stop run or manipulation to enter the market. Christian Cadet, yes, Dylan, it was. Can Ola do a live with you in the near future? Yeah, we're looking forward to that. Once he's finished up with university, we're able to get him on our team here full time. That's definitely the goal, have him making more content, helping our forex traders a bit more. So that's definitely something we look forward to. But if you're in the chat, definitely Telegram's open to everyone. Go ahead and send your messages in there, and then you can go ahead and get all those answered. Semper, much appreciated as always. Thank you. Hey everyone, we're all enjoying this wonderful content and effort put in by Dylan. If you're loving it as much as I am, let's take a moment to show our support and appreciation. Much appreciated, May. Thank you very much. Big shout out. Future handles. Do you want for an OB and CSD after overnight session to enter the market? So that's something I do look for. So I'm looking for changes in states of delivery after stops are taken. So for example, looking at overnight sessions specifically, for example, looking at this price action here. I know you're asking specifically about indexes, so let's go and take a look at that. So these highs right here, if we're looking for a bullish week, then it's a no-brainer that we're going to gun after the buy stops above this buy side here and here. So if we're looking for this high to be delivered to and through, let's go ahead and drop down to 15-minute. As I said, we already ran stops, shifted market structure, so everything's a green light for higher prices. So let's go ahead and zoom in on this price action. So as we see here, we have these relative equal highs. So now let's look at our overnight session and change in state of delivery. So this is classic. Many of you guys may see this as our accumulation, manipulation, distribution, which is exactly what we're looking for. If we're bullish, we're going to want to wait for retail to be manipulated or less informed traders, and then we're going to go in and look for our setups. So looking at overnight session, we see here, we take out these lows, and then we see this order block form here. We trade through that opening price. So now that confirms our change in state of delivery. And then you can refine this down through the time frames, even looking at it on a 5-minute chart. Let's say here, overnight session lows taken out, displacement higher, shifting market structure. So back to that question about how to validate high probability shifts in market structure. Well, everything's a green light. We have a higher time frame drawn liquidity. We've already ran out sell stops, so the manipulation's already entered the market. And then we see that displacement higher. So this is a high probability shift in market structure because of all these confluences. So that's also how you can use the overnight session and change in state of delivery to then confirm these setups intraday. Remus, I admire how patient you are with your trades. Any tips on how you can reduce over trading? Any tips on and how you can know exactly when to enter and take a trade? So a lot of it just comes with experience, back testing, whatever it is you're looking for, seeing it hundreds of times, thousands of times, where you're just desensitized to the outcome. You're right. Okay, great. You're wrong. It's part of the business. You move on to the next thing. So the reason I'm patient is because I know exactly what I'm looking for. I'm not here drowning in the candlesticks on a 1-minute chart every single day. I know exactly what I'm looking for. If that criteria is met, I'm all over it. If it's not, then I just wait for my next opportunity. Because as I've said, and one thing I really emphasize when I'm working and with trainings and working with other people, is that our next setup is programmed into the market. We know exactly when it's going to form and what it's going to look like. So there's never any reason to be impatient, be impulsive, and chase setups, because our next setup is programmed into the next session. So there's never any reason to be upset about a missed move or overtrade as a result of that. Because once you know what you're doing, once you study this material properly, you're going into the market knowing exactly what you're looking for, exactly what you're going to do, and why you're going to do that. So that's really the confidence is what allows you to not overtrade and give you that confidence to execute when it's time to. Mayo King, could you take a look at GU? Yeah, let me go ahead and take a look at pound real quick. So yeah, as we're seeing, pound is much weaker than the euro, as is to be expected. Let's let this through. Awesome. All right, so same thing on pound. I'm going to be expecting, as I indicated on euro, higher prices. We've traded back down to a discount. More specifically, this propulsion block in here. Propulsion block because it's nested within another order block. And we also have this balanced price range. Balanced price range because both sides of the market's been offered. We've left it, used it as support. Now we came back down into it. So as long as we remain above this down close candle or bullish order block and this balanced price range in gray, then I do expect higher prices into these relative equal highs at the 1.28. But a valid target on the way there would be consequent encroachment of the weekly fair value gap, which would be about 1.27. And then displacement through that and these up close candles in here takes us into the 1.285. Looking at a weekly chart, now bringing in a higher time frame draw above that 1.825, the previous week's high, I do like this inefficiency as a draw in here. So the first draw on liquidity would just be the low, which is 1.28. Through that takes us into the 1.290 big figure number, consequent encroachment. And that's what I like here. It's an expansion on the upside on the pound. Also assuming that the dollar trades softer into this week. Earl Garrison, thanks Dylan. Happy to help my man. Raptor, how do you decide which pair is gonna move more, like either GU or EU? So that's not something that I started doing my second week of trading. That's something that took me a long time to get to that level of mastery, to know which index, or in this case forex pair, is going to perform better. It's a lot of experience. If you want to know the analysis concepts that went into my predictions before they happened, look at the last few weeks live streams. I covered pound and euro, and I shared why I expected one to be more bullish and one to be weaker, and all that logic was explained there ahead of time. But keep in mind that is something that took a lot of study to get to that point. That's not something I started doing my second week. It's a lot of weighing out how one asset is traded, bringing in six sister, but also looking at the relative strength leader as well. So there's a lot of things to factor in there that I can make a whole video on, so I'm not going to go too deep into that. However, I do recommend you check out my previous live sessions where I did give the logic and outline everything beforehand, and then as usual it delivers as we expect. Adnan Quanbar, what series do you recommend watching for students who want to learn ICT? So for new students, I would recommend 2022 model. That gives you something to immediately get in the market, start looking, start researching, studying. And then from there, 2023 while you can before it finishes up. And then core content is definitely great to study as well. Definitely fills in quite a few missing pieces that's not in that 41 video series. However, that's definitely a great starting place for there. Future handles, what times do you use for the overnight session? 5 to 9 a.m. and mark out the highs and lows. So overnight session, that's currency merchant. That's a lot more his trading style, his model. Definitely great stuff. Learned a lot of stuff from him over the years, especially when I was first getting started. I personally don't use overnight session as my key liquidity pools being 5 to 9. I'm looking more specifically at London session highs and lows, PM session highs and lows, and AM session highs and lows. So one thing you can use that will really nail that down for you is ICT's One Trade Setup for Life video. He really covers that in detail at length, how to know which liquidity to use and how to know which liquidity that the algorithm's specifically going to be referring to. Davies, can I look at GJ? Absolutely. Let me go and take a look at GJ and then budget, take a look at Nasdaq. All right, so I think we're going to finish up there. So let me go ahead and look at pound yen. All right, awesome. So delivering higher on pound yen as expected. Everything's been bullish. One moment, let me wet my whistle. All right, so beautiful expansion higher here on the pound yen. Trading higher into these inefficiencies. Covered that. I believe it was KK that was asking those questions. Extend right. So traded through this with ease, indicating that order flow is still extremely bullish. And we displaced through it. So it's not just the fact that we traded through it, it's how we traded through those levels. So looking at the pound yen, nice extrapolation higher on the upside, trading to these premium inefficiencies here. So now that we've repriced to them, it would be reasonable to expect some measure of retracement given how much we've expanded higher. However, since we are still bullish, I'm not going to look to call a top in this market. But given that we have expanded higher, we've met several premium objectives, that's something to look at. So let me go all the way out on a monthly chart here for. So because we are seeing bullish order flow on a monthly, given that we do have the new monthly open and we've reached several premium objectives, a retracement lower is not something that's completely out of the cards. So now dropping down into our daily chart. Because we're so overextended on the upside right now, not to say we can't open and keep going higher. However, I'm going to favor a retracement I'll want to look at how we trade into these down close candles here. That'd be a first nice strong lower. And then from there, gauge if we're going to trade lower into the daily fair value gaps in here, deliver these inefficiencies, or just simply continue higher. So I would want to wait for a little more information here on GJ, given how we've already repriced to these premium levels, and it'd just be better to practice a little bit of patience and wait for the algorithm to tip its hand and just make it obvious what you want to be looking for here moving forward. So I do remember calling yen higher, or pound yen, to these inefficiencies, and we did get that beautiful delivery. So now that we have had all of our targets hit, it's best to just be patient, allow the algorithm to tip its hand, and then go ahead and get to work once you know what it's likely to do. Yes, Denisha. 2023 mentorship, one trading setup for life. That's exactly it. Appreciate that, Denisha. Thank you. All right, so let me go ahead and take a look at Nasdaq. Go ahead and probably wrap it up from there. Let's look at the continuous contract here for Nasdaq. So looking at Nasdaq, we have traded higher through these equal highs. So buy side liquidity delivered beautifully, and then the relative strength leader now would be S&P because it's lagging behind. So looking at Nasdaq, given that we did find support here from this fair value gap on that weekly chart, I'm still expecting bullish order flow. So my first area of interest would be this bearish order block in here, the low of this candle, okay, which we actually already traded to. So that'd be a first upside target on Nasdaq. And then I'd want to look at the opening of that order block. So these are the two upside objectives on Nasdaq, and then I want to see how we trade there to see if we may want to continue expanding higher to all-time highs or potentially trade lower. However, a lot of that depends on what we see with the dollar index as well. But for Nasdaq, everything's still bullish. So I would expect us to trade into this bearish order block, and then how we trade there midweek would then be interesting to weigh out to determine where we're going from there. Awesome. Raptor, which series of ICT can you recommend to me to know more about entries? I have watched ICT, core content, forex, and 2022 mentorship. So if you just want to become a freak, then definitely the 2023 mentorship is it. Several entries covered there, entry mechanisms that are within that mentorship. A lot of stuff that has never even been released to the trading community is also being released there. So if you want to learn more advanced ICT smart money concepts, then that's definitely the place to do it. So 2023 would definitely be the next step in where you're at. So Sharky NQ on the hourly. Yeah, let's go ahead and refine this a little more. If we're going to do it, might as well do it right. So as I said, these dotted lines here are the key levels on that weekly bearish order block. So same thing as I'm seeing on S&P here. I like this high here to be taken out. However, I'd want to see how we trade inside these discount fair value gaps. So same thing on S&P. I'd want to see some type of manipulation early on in the week and then expansion higher into these premium levels. But given that we do have a new month opening up and the economic calendar, definitely important to monitor and weigh these things out yourself. However, that's what I'm expecting on Nasdaq for the hourly. Awesome. All right, guys. So I think we're going to go ahead and wrap it up here. Raptor, thank you so much, bro. Absolutely. Happy to help, my man. Mayoa King, thank you so much. Happy to help. So I think we're going to go ahead and wrap it up here. So I hope you guys all have a great trading week ahead. For our fellow Americans, enjoy your July 4th Independence Day celebration. And with that said, I'm going to go ahead and sign off here. Have a great week, everyone. Thank you for joining us. Much appreciated, and take care. I'll update you guys in the Telegram. See you.